Good afternoon, SIAS members and unit holders of FHT. Thank you for tuning in this afternoon for this SIAS Fireside Chat session. Today we have invited Mr. Eric Gan, CEO of Frasers Hospitality Trust, FHT, to join us. Eric, thank you so much for joining us today. How are you?
I'm good. Thank you, David.
Good,
Thank you for the
right?
invitation. Yeah.
Okay. Yes, I'm coming from Melbourne. The cold weather is biting, but it's really interesting, I think, for our unit holders to hear you.
Yeah.
So we met with the management of FHT some 3 years ago, you will recall, to discuss on the proposed privatization of which barely fell short of the necessary 75% approval rate by a wee 0.12%. All
That's
right,
right.
that was almost there, almost there.
That's
But
right.
3 years later, Eric,
Mm.
here we are again with a new management team and a new privatization offer of 71 cents, just 1 cent more than what you offered last time on the table for staple security holders to evaluate and consider. So investors today, um, you know, unit holders, we will have an in-depth discussion with Eric to provide you with more clarity and color on the proposed privatization and what has changed for the REIT since the last privatization exercise, as well as how this current offer is different compared to the last. So, Eric, would you like to say a few words to the audience, say a minute or so before we begin the Q&A?
Yeah, sure, David. Thank you very much for the introduction. A very good afternoon to all the staple security holders. I'm Eric here. And of course, David was right. Back in 2022, we have actually embarked on the privatization exercise. It has fallen through. We missed it by a mere 0.12%. And of course, back then, if you recall, it was at the early stage of a recovery from COVID. So probably there were expectations that perhaps the full recovery will be able to present a better value. And truth be told, since then, since the unsuccessful privatization back in 2022, we have continued operations with business as usual back then until now. And you can see that the room rates have all gone up, but unfortunately the DPS, which is a critical measurement for us, is that it has not grown meaningfully. So I think it has been very challenging, and that's the reason why we have gone back to a drawing board and relook at how best to unlock value for staple security holders. And we are convinced that, perhaps privatization really makes sense. And we want to put forward this proposal for all the staple
Okay.
security holders to consider. Yeah.
So really, I think staple holders are scratching their head. Hey, they're just giving us 1 cent more.
Mhm.
Uh, Perhaps we can start with you elaborating on the key factors influencing the assessment that FHT's current portfolio and platform may be unable to overcome the structural challenges in the hospitality sector. Specifically, how did considerations such as asset quality, strategic positioning, execution capability, or the existing operating model inform this view?
Sure, David. Let me go back to provide a little context here. FHT was listed in 2014, and with the idea of providing a geographically diversified portfolio in hospitality assets in prime locations. And of course, since 2014, there has been quite a significant change in economic landscape, and a lot of things have happened since then. To name a few, right? Brexit happened in 2016, and then pandemic happened as well for almost 2.5 years. And we all know that COVID-19 has actually decimated hospitality industry in that sense. And then over the years as well, Forex has actually depreciated against Singapore dollars quite significantly since our IPOs. Also, interest rate environment has changed. It has been higher for longer. So these are the things that have actually, shifted the dynamics of the whole thing. And also, apart from that, geopolitical tensions like, ongoing US-China trade war, Russia-Ukraine war that resulted in, inflation as well as energy cost escalation and things like that. So these are the things that have happened since 2014 until now. The whole landscape has changed. Operating environment has become more challenging for sure. And that's the reason why some of these things are beyond our control, as I mentioned earlier. I mean, if you look at how the economic landscape has, changed, is something that's beyond our control, and that has actually impacted our results and our distribution. Yeah.
So you're saying that if you continue, you will be going down and down.
Well, I'm saying that it's challenging. The challenges will not dissipate anytime soon. We still
Right.
face all these headwinds, and it's going to be very challenging going forward. I think
Yeah.
to put things in perspective, David, really, if you look at it, back in 2022, it was a recovery from COVID, and since then, if you look at the results of our past 2.5 years, our DPS, although our RevPAR has actually grown better than or higher than pre-COVID, in fact. But our DPS has not grown in same quantum. In fact, it was quite muted. Why is that so? And really, if you look at the what we have experienced is that cost inflation has actually come in very strongly. And as much as we are able to mitigate it through transferring the cost through higher average room rate, but nonetheless, the other environments that are beyond our control, like high interest rate environment, weaker forex against Singapore dollars, all these have taken a toll on our DPS. So that's the situation that we are in. Yeah.
Okay, so it is the DPS factor.
Mm-hmm.
So could you provide insights into how the 71 cent
Mm-hmm.
offer was negotiated, Eric?
Yeah, sure. Well, to begin with, of course, we had undertaken a strategic review and looking at all various options. At the end of it, we felt that, privatization was the right way. And because of that, but privatization really depends on whether FPL being the sponsor will have the intent of privatizing it and at what price, right? I mean, it's a two-way thing. So one thing led to another, and so when we did the exercise, we felt that the best way to unlock value was really through the privatization route. And to do that, we actually approached FPL. What's their intent? And they quite clearly stated, that they still hold a long-term view for hospital assets, and they don't mind looking at it on a long-term basis across various cycles. And because of that, we say that perhaps privatization is a good option for them to consider. And so we started the negotiation. And how we have done is that we have actually appointed two financial advisors, DBS and UOB, to help us in this whole process. And our financial advisors have actually looked at various metrics, what is in the market, right? At the end of it, we are comparing against various matrices to ensure that it's a fair and reasonable deal, and that's a viable option for our staple securities to take on. And to begin with, what we have done is that first of all, we ask the question, what is your NAV at the present moment? That's the starting point, right? I mean, we always look at our NAV. I think for a REIT, fortunately, because all our valuations are always mark to market at the latest position, we are not stating at cost, but they are really at mark to market latest valuation. And with that in mind, right, we have actually used that as a starting base. We have taken in the latest valuation, and then we have adjusted for forex changes because forex doesn't just impact our valuation, but also impacts our borrowings as well. That's so, because you take borrowings to acquire assets. And we have also adjusted for the distribution for first half that we will be paying out, in fact, on the 27th this month itself, June. So when we have adjusted for these three components, specifically the NAV has actually, the adjusted NAV, I would say, is actually at 63.9 cents. So that's the starting point that we look at. And of course, we have also looked at what was the precedents that we had, right? Back in 2022, the previous board, in fact, had also negotiated really hard. And, it was at a 7% premium. Even at 7% premium back then, it was above market range generally. And this time round, we have also again embarked on this exercise with the two FAs together, negotiated very hard with the sponsors. the deal that we concluded on an arm's length basis was at 71 cents. And at 71 cents, in fact, yeah, I understand that, some investors may be thinking, hey, it's only 1 cent higher. But really, if you look at the 1 cent, it's not just a 1 cent. Really, if you look at the metrics that we have compared against, it's a lot higher. It's actually at 11.1% premium. And the average market precedence for privatization is only at about 4%. Here we're talking about, 11.1%. It's really above market norm, I would say. And in fact, when we compare against the other matrices, likewise, we have shown that it's a very attractive value proposition that we have here. And with that, the independent directors said that, yeah, we have something for the staple security holders to consider. And that's how we came about that, this whole value.
Yeah, I mean, I asked that question because in the mind of every
Mm.
the long-term staple holders who have been with you, retirees,
Yeah,
and the lot, they always think. But the last time you almost crossed the line, you almost
that's
succeeded.
right. That's right. That's right.
There's a small percentage that was
I
needed.
think last time maybe David, I think there were small pockets of investors felt that it was at the recovery stage. It didn't help that back then because we had our scheme meeting in September 2022, and F1 event were happening around that time in September, and room rates that were that comes in during that period was really high because it was a maiden event that was just opened
Yeah.
post-pandemic in that sense. And it wasn't a real representation of, something that's sustainable, I would say. But, we do hope that looking back to the 2.5 years results that we have shown that while room rates may have gone up, DPS have not gone up because cost inflation has come in. A lot of other factors have come in that actually, resulted in a muted DPS growth. Yeah.
Mm. The world is full of wars now, Eric.
Yes, it is.
The start of Iran has been just bombed.
Oh,
We
okay.
don't know where we are going, whether we are heading towards Third World War.
Yeah, a lot
You
more
know,
uncertainties for sure. We are concerned actually. Yeah.
yeah, everywhere there is east-west, everywhere there is problem. Now, the sale of the entire FHD platform to a third party was an option in the strategic review, as you said. What steps were taken to assess whether an open market or a competitive bid process might yield a higher offer than the current 31 cents consideration?
Fair questions, but unfortunately, David, I can't go into specific details on,
Yes,
on, on the deals because they are confidential. But
yes,
what I can share in this platform, David, is that we have looked at three main objectives here that we want. Number one is really addressing the structural constraints that the REIT faces. And number two, how best to unlock maximum value, potential value for our staple security holders. And thirdly, it's all about execution, speed, and certainty of a deal. So what we have is that looking at all the various options that were presented to us by the financial advisors, the independent directors have in fact, well, I would say the board have taken the position that privatization is the best route forward in that sense. And of course, that led on to, our independent directors to actually proceed with the negotiation with the sponsor because the sponsor and the concert parties actually holds about 63%. They are basically the natural choice to privatize this platform. Yeah.
Hmm. Also,
So, in fact, sorry, David, maybe
yeah,
let me just add on. In fact, looking at it, that's why we have also, as part of the whole process, it's a very transparent process. As part of this whole process, we will also be appointing an IFA. In fact, we have appointed Deloitte as an IFA.
yes,
IFA
coming
being
to that.
independent, yeah, they will be providing independent opinion on whether the deal is fair and reasonable. I think
Yes.
that will add credibility to
Yeah,
this
perhaps
whole.
you can share how the IFA was selected, what measures were taken to ensure the independence and objectivity of the advice, especially considering Deloitte's prior involvement in 2022 exercise.
Yeah, you are absolutely right. I mean, to be fair, Deloitte is a big four firm. They are independent firm for sure. We have no
Yes,
dealings with Deloitte other than appointing them an IFA. They are not our
yes.
auditors or they don't do much work with us. So they are
Okay.
truly independent from our perspective. And of course, our criteria of selecting a financial advisor or independent financial advisor is to ensure that they have the expertise and capabilities to do such exercise.
Yes.
Of course, Deloitte has a lot of experience in this field in privatization, mergers, acquisitions, divestments. So they are in capital markets and they understand the dynamics of this whole exercise. They have experience in privatization as well. So we felt that and in fact, they have done the exercise for us last time. So they should be, able to do this exercise independently again this time around. Yeah.
Mm. So, will FHT be making a final distribution for the period from 1st April 25 up to the day immediately before the effective date? Will the distribution payout be 100% or distributable income with no retention?
Okay, final distribution will be paid. We call it the cleanup distribution. Okay, maybe let me just put it in perspective so that everybody is very clear.
Yes.
Firstly, our financial year starts from 1st October last year and ends on 30th September 2025. Our
Yes.
first half distribution, which covers from 1st October 2024 to 31st March 2025, will be paid 27 June this month. So that's first half distribution that will be paid out. Now, assuming the scheme goes through at 71 cents, right? And so the staple security holders will be getting the 71 cents. In addition to the 71 cents, staple security holders will also receive the final distribution, which is the cleanup distribution. Now, this cleanup distribution covers the period from 1st April 2025 up to the day of effective scheme date, the effective date. The effective date is tentatively we're looking at if everything goes through successfully, it will be in late August. So staple security holders can expect to receive number one, the half year distribution that is paid in June, then the 71 cents, and then the final distribution up to the effective date. Yeah. So it will be paid out as such. Yeah.
So, for the benefit of the stakeholders, once again, let me ask, there's no chance that there will be a revision of the offer price.
Well, David, to be very honest, I'm not in a position to answer
Yes.
this. But very objectively, if I were to look at it from FHT's perspective, I think the offer that is on the table at 71 cents is a very credible deal, very
That
attractive.
8% premium,
No, 11.1% premium. At 11.1%
11.1%,
premium.
higher than the last time, isn't it?
That's right. In fact, the last time it was at 7% premium. This time around,
Yes.
it's at 11.1% premium. Not only is it higher than last round, but it's also higher than most of the matrices that we have compared against. Yeah.
Yes. Okay, the final question. Should the privatization of FHT be yet again unsuccessful for any reason, what will be your plan for FHT?
Well, if it doesn't go through, then it will be business as usual,
Yes.
again, in a sense. I mean, we have gone through that back in 2022, when the scheme doesn't go through, it will be back to the drawing board. And of course, we
Yes.
will continue to operate as it is
But
based on.
but what are your worries? What are your worries if you have to go through with this business again?
Yeah, I have a lot of worries. In fact, like I have shared earlier, David, I think
Yes.
the challenges, the headwinds that we are facing, uh,
Yes.
are a real concern. And the couple of things lah. I mean, firstly, if you look at the structures that the economic structures that we have been in, it's not going to change anytime soon. The challenges and things like that. So forex will continue to be an issue. Higher interest rate will continue to be an issue. Inflation is an issue. I think one thing that most people may not truly appreciate is that while we are able to pass on higher inflation costs through the room rates, but
Yes.
cost when it increases, like labor costs, it can only go up, it will never come down. Whereas room
Yes.
rates, as we all know, is very dynamic. It goes up and comes down. It's very volatile. So sometimes we make money, sometimes we don't because of the competition in the market. But cost structure, once it goes up, it hardly comes down. And that's the reason why it has been pretty challenging to actually maintain growth in DPS, and then compounded by the fact that we have to contend with higher interest rate environment, forex, weaker forex against Singapore dollars. So these are the headwinds that we face, and it is something that to bear in mind. for all staple security holders. But
And depressed DPU, you have also been talking about the fact that one of the major concerns was that DPU was affected,
that's right.
not able to provide the DPU expected by your staple holders.
That's right. I think DPS or DPU is actually challenging for it to continue to grow. And partly because also, if you look at hospital, it is a very challenging asset class, number one. Number two, our platform is relatively small compared to our peers as well. If you look at it, we
Yeah.
also have very small free float. We are not in the index. We are not able to trade as some other REITs that are in the index. And as a result of that, our cost of equity is higher. Our debt headroom is also relatively smaller compared to the others. So growth will also be more challenging, I would say, compared to our peers. Yeah.
Eric, who are your peer group competitors?
Well, our peers are, Escort, basically Capital and Escort. We have CDL Hospitality REIT as well as Fireside Hospitality Trust. Yeah.
And how are they faring?
Well, I can't comment about my peers, but I'm quite sure industry-wide, if we face the challenges on hospitality, well,
Same
it's
challenges, yeah?
yeah, but I think the portfolio are slightly different because we invest in different countries. They invest in different countries. The scale and the size of the assets and the locations play an important role as well. I don't think it's really a one-to-one comparison. It's not a fair comparison, I would say. But if
Mm.
I were to come back to my REIT, FHT, we definitely understand the challenges that we face, and we can foresee that the headwinds are here likely to continue. Yeah.
Yes. Uh, okay, so I think we have come to the end of this fire chat, Eric. But would you like to round up? You want to make an appeal to your stakeholders?
Yeah, sure. Thank you, David, for this opportunity. And in fact, I want to reach out to all the staple security holders, for them to understand that hospitality sector itself continues to face significant structural headwinds and challenges. And because of that, we have faced challenges in growing the REIT in terms of DPS and NAV, growing it meaningfully. It has been very challenging. It has been like swimming against the current, right? While in local currencies we have been able to do well, but Forex have actually reversed all the gains that we have. And of course, it's not something that we look at it lightly. In fact, if we were to compare right now the position that we are in versus 2022 when we did the earlier scheme, the situation has in fact gone further south, deteriorated further. So I think has been very challenging, and that's the reason why with this offer that we have, second time this scheme meeting at 71 cents, and it's at 11.1% premium. I think this is a very attractive premium compared against all the matrices that we have compared against markets. And we like to take this opportunity to urge staple security holders to look at it very objectively and encourage them to look at the scheme document that we will be sending out, will be dispatching to them in due course. Look at the merits of the deal, review the IFA's opinion, and hopefully, and also more importantly, we hope to see our staple security holders turn up for the meeting in person or in proxy, and hope that they can make a well-informed decision and vote accordingly. Yeah. Thank you very much, David. That's all. Yeah.
Thank you very much, Eric. And we hope that you, staple security holders of FHT, have managed to take away good insights and useful information this afternoon about the proposed privatization. Please keep a close lookout for the announcement of the scheme meeting as well as the IFA report, which should be coming out over the next couple of weeks, and you should make an informed decision. Thank you very much, Eric, and thank
Thank you,
you
David.
for
Thank you
joining
so
us
much.
this afternoon. Bye.
Bye.